why are rates going up? Hey, it's Larry Gonzales with the Mortgage Market Minute. We're going to talk today about the economy and the things that are affecting us in our housing market today. Before I go on though, be sure to like, comment, subscribe to my YouTube page. Love to have it. It helps me grow my audience so that I can educate more people. So here we go. So rates went up this week. All right, rates went up a lot this week. The big reason for rates going up this week, there's a lot of talk about inflation. And you know what? We're in the holiday season, so most people don't care that the personal consumption expenditure report went up 0.6% in October to 5%. All right, the highest we've had in 30 years. Most people don't care about that. What they care about is it is $4 to fill your vehicle up with gas. $4 a gallon for gas. Turkeys are expensive this year. All right, they're Christmas shopping now, and the cost of goods is going up. So while we may not have been paying a lot of attention to inflation before, we're definitely paying attention to it now because we're spending money. All right, wages. All right, it's a good thing that wages are up 11% year over year, but that is also wage inflation. All right. Companies are having to spend that money to keep people or to hire people in their jobs. So that is another measure of inflation, 11% increase. With regards to inflation, Fed Chair Powell, all right, President Biden reappointed him as the Fed Chair, which personally I'm excited about because I think he's doing a good job. And President Biden wants to finish what he started. Well, that actually had a negative effect on interest rates. And interest rates shot up once that was announced. But overall, I think that's a good move, and I think he's going to move us down the line. And I think that decision is good for us, our economy, and then for the housing market. Obviously, I don't have the crystal ball, but that's what I think. Fed meeting came out. All right, Fed meeting minutes came out, and really the Fed members, their biggest concern is inflation getting out of control, and because of that, they may move to hike interest rates up, the Fed funds rate up sooner rather than later. The inflation reports we're getting, they're not for November, they're older, they're for October. So we do have some supply chain issues that seem to be, clearing themselves out. There's still issues, but they're getting better. So at some point, will we peak? Maybe not November's reading, maybe December, January. So it's very tough for anything in the holiday season to really take a measure of it because more people get hired in the holiday season. More people are spending money in the holiday season. This is a holiday season where everybody's traveling, so you have a lot of different things going on that are going to weigh and impact those readings that we use to help measure the economy's effectiveness. Speaking of that, unemployment report came out this week. All right, 199,000 people applied for unemployment benefits last week. That is the first time that we've been under 200,000 since before the pandemic. There are, in total, less than 2.5 million people receiving unemployment benefits right now. That's great. That's a post-pandemic low. So that's great news, right? We still have probably 10 million jobs that need to be filled, and that's a different story. But the fact that we have a lower unemployment rate is great news. Let's go back to why rates are up. Inflation fears. I think that's the number one reason why rates are up right now. All right. We are a very reactive economy or market. All right. The markets react real quick and then they settle out and they get back to normal. So I do think rates will probably come back down over the next couple of weeks, but they shot up. Will they come back down to where they were a month ago? Maybe not, but I think they'll still settle out. And they're still low. They're still historically low. All right. So it's not like we're up at 4%. We're still high twos, low threes, okay? Hey, we got a couple housing reports that came out this week, all right? The new home sales report came out, and new home sales are down 23% year over year, all right? This is compared to October of 2020. What was going on in October of 2020? We're still in lockdown, all right? So not a very good measure to compare. Compared to 2019, new home sales are up 6%, all right? So not as bad a reading as one might think. Again, it's all about perspective. Existing home sales are up for October, up 0.8% month over month, although they are down 0.58% year over year. All right, and why is that? Inventory. Inventory is down 12% year over year. All right. One of the measures of inventory is how many months of homes do we have on the market. All right, we have 2.4 months of inventory right now. All right, this is across the nation. That's low. That's historical. That's indicative of low inventory, indicative of a seller's market. It's across the nation. Oahu, we are at 1.1 months of inventory. So while inventory is low across the nation, it's really low in Oahu. All right, and I don't see that changing necessarily anytime soon. Although once we get the second PCS wave, I think people, once they start, getting their orders and begin to execute, they're going to sell. All right, so I would expect the numbers to pick up a little bit in December, maybe a little bit in January, then kind of come back down. So that's what we got for the Mortgage Market Minute. I hope you guys have a great weekend. Hopefully you have a 3 or 4 day weekend. Enjoy it. Again, do not forget to like, comment, and subscribe on my YouTube page. All right, y'all have a great weekend. Aloha.